AI vs bankers? The real solution to corporate loan defaults in India. Corporate loan scams, the reform model that can actually work, stop loan frauds? Here's the hybrid banking model India needs. Why AI alone can't fix 5,000 crore rupee loan defaults. Corporate NPAs, the accountability system banks must adopt, fixing India's corporate loan crisis, the real blueprint. This video is not about blame. It's about structural reform. Stay till the end, the last 3 minutes explain the real solution. Corporate loan defaults worth thousands of crores have shaken India's banking system. Some say remove human discretion. Some say automate everything with AI. But neither extreme works. In this deep investigative episode, we designed the real reform model for corporate lending, a hybrid system that combines AI risk detection with accountable human judgment. We break down why human-only sanction systems failed, why AI-only lending is unrealistic, how discretion leads to corruption without accountability, the hybrid corporate lending reform model, AI-based red flag systems, independent credit committees, recorded sanction meetings, personal accountability in loan approval, criminal liability in proven fraud. Is this the future of banking reform in India? Watch till the end and decide. Subscribe for more deep analysis on banking, corporate governance, and financial system reform. The real reform model for corporate loan default is beyond AI vs humans. Every time a 5,000 crore rupee loan becomes an NPA, people say, remove bankers. Automate everything. AI will fix corruption. But here's the truth, human-only systems failed. Fully automated systems won't work. So what is the real solution? Today, we design it. Part 1. Why HUMANONLY system failed. Corporate loan scandals exposed. Overvaluation of projects. Political pressure. Relationship banking. Weak due diligence. Loan evergreening. Discretion without accountability creates moral hazard. The problem was never lending. The problem was unrecorded discretion. Part 2. Why AIONLY system won't work. AI can detect abnormal projections, compare industry risk, flag related party exposure, track promoter default history, but AI cannot assess geopolitical risk, judge promoter credibility fully, predict 15-year infrastructure demand, balance national economic interest. Corporate lending involves strategic judgment that cannot be fully automated. Part 3. The hybrid reform model. Here is the real reform structure. AI risk flag layer. First gate, before any committee sees the file, I must compare financial ratios with industry norms. Stress test cash flows. Detect inflated collateral valuation. Cross-check promoter history. Flag connected lending patterns. If red flags appear, automatic escalation. No file bypass. Independent credit committee layer. Not just internal bank officials. Include external risk expert, independent valuation auditor, sector specialist. Committee diversity reduces collusion risk. Recorded sanction process. Every large loan meeting, video recorded, digitally archived, decision rationale documented. If loan later fails due to negligence, records exist. Transparency reduces corruption temptation. Fixed personal accountability. Sanctioning authority must sign risk acceptance declaration. Document deviation from AI red flags. If fraud or gross negligence proven, career liability applies. Not criminalizing business failure, but criminalizing collusion. Criminal liability in proven fraud. If investigation finds bribe acceptance, inflated valuation knowingly approved, evergreening with intent to hide NPA, then strict criminal prosecution. No silent retirement. Accountability must be visible. Part 4. Regulatory role. After the NPA crisis, the Reserve Bank of India tightened asset quality review, centralized monitoring, early warning systems. But reform must move deeper into sanction architecture. Prevention greater than recovery. Part 5. Why this model works. Because it balances data intelligence plus human judgment plus transparent documentation plus personal accountability. Discretion remains, but discretion becomes traceable, and traceable power becomes responsible power. The real problem was never size of loans. It was invisible decision making. Automation alone cannot fix morality, and humans alone cannot guarantee integrity. The future of corporate lending is not AI vs humans. It is AI plus accountable humans. That is the real reform.